All right, so your stock, it closed up higher yesterday. I want to ask you, you had a beat on EPS, but you had a pretty big miss on revenue, according to LSEG. What happened in the quarter? What happened that revenue came in so much under expectations, but you were able to beat on profit?
Yes, Frank, we did have a beat on EPS, and as you know, earnings can have a lot of moving parts to them. We had one where our core earnings, the reason the stock was up, our core earnings were actually up nicely, but we did have a non-operating transaction during the quarter where we had a revenue, we had a sale of some securities out of our securities book. As a $13 billion asset regional bank, we carry about a $1.6 billion securities book. We did do a sale in there.
Okay.
We took actually a loss on that, which took revenue down, but that should really benefit future quarters, which is one of the reasons that the stock was up.
Okay. I want to get to a key metric for all banks. That's net interest margin. You were able to grow your net interest margin year over year. A lot of the analysts expected that very important metric, the spread between loans and deposits, to actually be under some pressure this quarter. How were you able to grow it over the last year? And also, what's your expectations going forward with Fed rate cuts?
Yes, Frank, you're hitting on really probably the most key metric for most of the regional banks. As we were the first regional to put out our earnings release, but that metric, a lot of the Wall Street banks, of course, have a greater fee income from things like investment banking. The spread between our loans and deposits is the most critical measure, and the margin that we make between those loans and deposits is really, again, a critical measure. We were actually a little ahead of expectation again for the quarter, and that's a combination of, we had loan growth during the quarter. This has been 2024 has not been a great year. As you know, the economy's been relatively slow. The loan demand has been relatively slow, but we had about a little over 7% annualized increase in loans on our balance sheet. That helped that margin. Also, with the interest decrease that came in, that helped on the cost of deposits.
So when you say 7% growth, do you mean by dollar? Because I'm looking at your earnings right now. I see deposits were up 3% year over year. However, borrowings, as you call it in your earnings report, actually down 19% year over year. So I wanted to ask you about that. You're a Southeast-based bank. You know, you're based in Tennessee, but you have branches in Georgia. You have branches in South Carolina. I mean, when it comes to loans, what are you hearing from your customers on both the residential side and also on the business side?
Yeah. So Frank, those borrowings, what that's referring to is actually where we're borrowing. The lending that we do was actually what's up quarter over quarter, and so we're fortunate in that where we sit geographically in that Tennessee, Georgia, Alabama footprint is an area where we still have very strong economic vibrancy. We are continue to see in-migration. Actually, Robert Frank was on a story earlier this morning talking about how folks are migrating in Tennessee and Georgia, being two of the key states. And so we benefit from that. So as a bank, one of our key activities is making loans, and that in-migration is really helping. Corporate moves into our part of the world continue to happen at a significant rate. And so again, all of those benefit both the consumer side on lending, but also benefit on the business side on our lending activity.
Chris, it's great that you're watching the part of the show before you get on. We appreciate that. I want to ask you one last question, kind of touching on what Robert Frank was talking about. We've seen a lot of hurricanes in the Southeast. Most of your branches are kind of outside the most impacted areas, but in general, how do you see these hurricanes and this hurricane season impacting economic activity in the Southeast?
Yeah, it's certainly been tragic what's happened so far. Most of the direct impact on us is on the far eastern end of Tennessee, but at Tennessee, North Carolina, right on the border. We've seen a lot of impact, mostly on some business impact. Actually, we haven't seen very much impact from a business standpoint, but we see it on the people side, where people have losses, and then the communities. We're very much a community-oriented bank, and the impact on those communities is just devastating. So Tennessee is known as the volunteer state, and we've seen a lot of folks come into the rescue, and so we appreciate that, and we've well on the road to
Yes.
recovery there.